Hi, good afternoon, everyone. Sorry for the delay. We were experiencing some PowerPoint difficulties. So I am joined by Chris. Hi, Chris. How are you?
I'm good, thanks, Rachel. How are you doing?
Thank you so much for being here today. We finally got the slides working. The presentation just wouldn't be as effective without them, right, Chris? So,
Yeah. I'm not
Chris,
as dynamic as your other coaches.
that's true. So Chris is the president of the Finish Line Group, and I don't want to take up too much time, but you're going to talk to us today about 5 tax saving strategies that you should be using for your business. Super important, super necessary. I know there's probably a lot of new things too with the pandemic and how it's affecting small business. So I'm going to pass it over to you. Thanks so much for joining us today, and I really look forward to the content.
All right. Thanks, Rachel. Hi, everyone. My name's Chris Coulter. As Rachel mentioned, I'm president of the Finish Line Group. A little bit about me. This is my second, maybe my third career. In my past life, I owned about a $35 million business. It was a furniture business for about 20 years, and we had about 70 employees. Over those years, we built up a number. Probably about $5 million of retained earnings. In 2008, we were significantly impacted by the financial crisis, and we ended up closing down our business in February 2010. And after 20 years of a lot of sweat equity, we ended up walking away with nothing, my business partner and I. So after not being able to afford to retire, and my wife at the time decided you have to go out and get a job, I went and ended up getting an employee benefits role with a company that I'd actually hired to look after our benefit plan. So I understood about the financial services business, and a lot of the applications I realized could have been really effective had I deployed them when we had our business. So what I decided to do was take sort of the mistakes that I made and coach other business owners and entrepreneurs on how to avoid the same mistakes that we had experienced in our business. So looking at things like creditor protection, tax efficiency, wealth creation, insurance, key employee retention, things along those lines were really important and relevant. And I realized a lot of business owners were probably making a lot of the same mistakes that I was making, that I had made in our first business. So in 2020, I sort of looked at sort of the financial services piece, and there was something missing. And the piece that was missing was sort of mental health and entrepreneurs, and realizing that there's a significant amount of entrepreneurs that are impacted by mental health issues. So that's for another discussion. So today, what I wanted to primarily focus on, depending upon time, primarily the 5 tax saving strategies to use within your business. A lot of these tax, I know, is inevitable, but the less amount of tax we can pay legally and legitimately, the better we are. So I'm going to talk about some little known strategies that you can use today to positively impact your personal wealth. How creditor protected are you, especially in this day and age with the pandemic and a lot of companies facing uncertainty? It's a really relevant conversation. And how to keep your senior people from leaving. A lot of business owners have some great people, but how do you actually keep them and prevent them from leaving? So I guess a little bit of the reality of our world. Our businesses are facing huge uncertainty now. A number of us will not be in business this time next year. Government's going to need to pay for all these subsidies that they've created to keep people fluid and moving forward. And the federal Liberals in the past have gone after business owners to be able to claw back as much tax as possible. And they're going to be even more vigilant in the coming years and months. And so we need to protect ourselves more than ever. So the other important thing to understand, and I should preface this by saying I am not an accountant. I am someone who has made a lot of mistakes with a number of different businesses. And remember our accountant saying, well, you can, the end of our year, reviewing our income statements, them saying, hey, you know what, you can issue a dividend or you can bonus yourself. But either solution is going to yield the highest marginal tax rate that you'll be paying. So there's some other ideas that I think would be probably more effective, especially in the long term. So business owner pension plan. That is a lot of, I've got some friends who are teachers, who are teachers or nurses or government employees, and they've got these really rich defined benefit pension plans, and they're really quite envious, sitting from where an entrepreneur stands from. So the important thing to understand, there are similar opportunities for business owners. They are all governed by the same pension laws that govern the teachers and the nurses and the federal government employees. So it's all written into law. So we're not talking about any, let's hope we don't get caught type of initiatives. And the beauty of pensions, particular as it relates to these business owner pensions, it allows you to contribute up to 60% more contribution room over your RSPs. Which for those who max out every single year, over time is a significant amount. I'm going to keep re-emphasizing this point. It's 100% creditor protected. And it is an expense that's paid for by your business. So as opposed to taking money in as income and then contributing towards your RSP, this is something that your business pays for. So it actually doesn't touch your T4. Okay, so it is actually a line item on your income statement. The other nice part, especially with all this volatility in the markets, is that your business can underwrite the rate of return. So the rate of return is guaranteed by your business. And the other thing that's inherent to business owners is having that cash flow flexibility. So if you're having a great year and you can dump a whole bunch of money into it, that's great. But there are going to be those lean years that the company can't necessarily afford to. The nice part about this, if you're having a lean year, you can contribute as little as 1% of your T4 income, and that keeps your pension going. The other aspect that's really nice about this, all your admin fees, all your commissions that you incur through your pension can be also written off as a business expense. You also, if you want to retire early, you can transfer a lump sum, a significant amount, which is a great way to be able to get retained earnings out of your business tax effectively. And then the other aspect, if you want to sell your business, you have to qualify for the lifetime capital gains exemption. And in order to do that, you cannot have more than 20% passive income used within your business. And if you have greater than that, then you can't actually qualify for the lifetime capital gains. So this helps you cleanse your business for that. And it also allows you, if you start up a business, you've been in it for 15 years, let's say, it allows you to leverage past service. So just because you start it in 2020 doesn't mean you can't take advantage of all the income you derived or the time that you worked within your business, let's say starting back in 2000. So you can leverage from past service. The next item is something called the retirement compensation arrangement. So what it is, it's an option. Typically, it's an option after your RSP or your pension plan has been maxed out. It is also written into our tax laws. It's actually written into the Canadian Income Tax Act. It allows you significantly higher contribution levels than a pension or your RSP. You have a great amount of flexibility in that where you can actually direct your investment options. And it does not affect your RSP or your pension contribution limits. Here's this familiar phrase, 100% creditor protected. And once again, it is 100%, it's 100% of it is an expense to the business. And it also can be paid to any employee of the company. So it could be the owner, or it could be any person that you feel is worthy to set this up for. A corporate insured retirement plan. So what this does, a company's need for insurance, but also address where you can put corporate passive income if you have a bunch of passive income in your business. The nice part about it, unlike investments, if you invest within your business, you actually, which is subject to significant tax, any capital gain within your business, this can grow tax-free within a life insurance policy. And the nice part about it, this cash value that accumulates over time is something that can be leveraged by the business as a line of credit or something along that line. And if done properly, you can get the cash value into the business owner's hands personally and tax preferred. And I preface that done properly because if you just take the cash value out, it will trigger tax. But there's a fairly there's a routine, a means in which you need to go about doing it in order to be able to get it into your hands, tax preferred or tax free. And the other nice aspect about this, because it's insurance, and insurance typically are very conservative in their investments, they have guaranteed growth rates. And if you are not in a position to be able to put a whole bunch of money into permanent insurance, it can be a combination of term and permanent life insurance. Okay. So it is a great long-term strategy for companies that have a long-term life insurance need. So funding a buy-sell agreement or partnership agreement, if you have some corporate capital gain exposure, or you have aggressive growth plans for within your business. The next initiative is something called the split dollar critical illness insurance. So yes, as much as these are insurance products, these are specifically designed for business owners. The nice part about this critical illness, for those of you who don't know, is if you take a policy out on a business owner who gets sick, and there's about 25 different conditions, catastrophic conditions, that the policy would pay out for, it will actually end up paying out on the business owner if they get sick. So there's two components to it. The business pays the critical illness insurance portion of the policy, and the business owner personally pays the return of premium portion of the policy. So if the business owner gets sick, the policy will pay a one-time lump sum amount into the business. But let's say after 15 years, this business owner is healthy, doesn't really need the critical illness portion of the policy anymore, and he or she decides that they were going to cancel the policy, and they can actually leverage and take out 100% of both parts of the premium that's been paid out. A that's been paid personally by the business owner, but also the second portion that has been paid by the business. And the critical illness insurance is the most significant piece of that. So you can actually get a lot of that money out of the business that you have invested into a policy that never paid out. So it's almost like a guaranteed savings tactic. This is probably one of the things I see, one of the greatest offenses that has been made by business owners. And having lived in the employee benefit world, and still do, are business owners that are still paying a portion of their health and dental expenses personally in after-tax dollars, as opposed to paying it as an expense for the business. So most business plans don't pay all medical or dental expenses. Items like braces, prescription glasses, paramedical practitioners, only partially covered in the case of braces. Trust me, I have 3 kids that have had braces. They're about $6,000 a pop. There are not very many benefit plans that will pay for that. So being able to push that expense legitimately through your business is a great way of saving after-tax dollars. I've got a number of business owners that have had children who attend private school, and their tuition, because their child, one had ADHD and the other one had autism, they were actually able to write off their entire child's private school tuition through the business. And once again, this is all legitimate. It's all recognized within CRA. So there's nothing funny or untoward here. So once again, it's paid for as an expense to your business versus paying for it in after-tax dollars. And to that previous point, the private school tuition, you can't just write off. There has to be a medical stipulation or a medical condition that your child is affected by. Okay, so that wraps up sort of the 5, and there are other initiatives. Those are probably the 5 greatest opportunities for business owners. The next subject is about creditor protection. And especially with this uncertainty and with potentially a number of businesses not being in business a year from now, it's important to secure your assets as much as possible. So whether your business is suffering or thriving during this pandemic, creditor protecting your assets is a smart thing to do. And I say this because there were probably a number of initiatives I could have done that had I done them, I probably would not have, I would not have walked away from my business with nothing. So a lot of people don't realize that their RRSPs are not protected from creditors. It's not common for them to go after it, but they are actually eligible, an eligible asset if someone wants to go after them. So if your business is facing a precarious future, there are measures that you may want to take to safeguard some of your assets. So potentially transferring your RSPs into a pension, not only to creditor protect them, but to get your contribution levels at a higher level. That retirement compensation arrangement is also a very unique opportunity to be able to creditor protect a significant amount of money. And I have to put the caveat of always consult with a financial professional before undertaking any of these initiatives, now that we've got that out of the way. And this is another one that I'm often asked by business owners. How do I keep my senior people from leaving, especially in smaller businesses if they don't have an equity stake in the business? You can give signing bonuses, profit sharing, things along that line. But at the end of the day, there really are not any true golden handcuffs. So I'm going to talk about one in particular, but there are a number of different strategies you can use. So going back to that retirement compensation arrangement, the RCA, setting up a contract with a senior employee that you want to ensure does not leave. So you draft a contract between the company and the employee in question, and it can outline sort of the terms. So it could be the length of the contract, it could be the amount that is contributed every single year, and you both sign on and sign up for the agreed upon terms. And if the employee leaves, so let's say you agree to give someone $100,000 a year for 10 years, but the agreed upon amount is they have to stay for 10 years. If, let's say, they leave in year 8 and you had contributed $800,000 into their retirement compensation arrangement, you are eligible by law to actually claw back that contribution portion. Now, you have to take it back into the company as income, which could trigger additional tax, but all of a sudden getting an insurgence of $800,000 that you thought you had given away is a pretty nice bonus. Yes, albeit you do lose the employee, but there are some benefits to having things like this in a contract. And once again, all of this is supported within the Income Tax Act. It's just not common, and people don't necessarily understand how they can utilize aspects of these strategies to retain some of their people. So it was a very high level going through the major details as far as what people can do and the opportunities that are available to them within their business. If you would like a more detailed version of what I've presented today, I'd suggest send me an email at chris@thefinishlinegroup.com and just put your contact information and that you'd like a copy of the ebook, and I'd be happy to send it your way. All right, and thanks for your time. Have a great day.